I want you to imagine just for a second a world where the absolute best
Oh,
things, like the most incredible life-changing opportunities, are entirely invisible to the public. You can't just Google them.
right. They're not on a job board.
Exactly. And you certainly can't browse them on some public real estate website. They exist in this totally hidden ecosystem.
Which is reserved only for those who know exactly where to look.
And more importantly, who to ask. Today, we are taking a deep dive into exactly that. We're looking at the shadowy realm of elite real estate.
Because it really operates by a completely different set of rules. We're looking at a case study today from early 2026.
Right.
Alongside this really extensive professional portfolio from Cara Conde, she's a top-tier luxury and commercial real estate broker.
Operating in the greater Indianapolis area.
Yeah, exactly. And this material offers just a fantastic masterclass in how high-end off-market deals actually happen in the real world.
So our mission today is to break down the blueprint of this exclusive world. We're going to examine the specific mix of boots-on-the-ground networking.
And the futuristic predictive tech required to find these hidden properties.
Yeah, we'll explore what this world teaches us about scarcity, high-level negotiation, and gaining what is essentially an unfair advantage in any competitive market.
Yeah.
Okay, let's unpack this. We need to set the scene first.
It's early 2026.
The location is Zionsville, Indiana, and the public real estate market, meaning the MLS,
The multiple listing service.
right, it is incredibly tight.
Yeah, and tight is honestly putting it mildly. In this specific luxury bracket, premium properties are vanishing before the sign even goes in the yard.
Because Zionsville is so incredibly desirable.
Absolutely. You have these great historic brick streets, elite schools, and this really unique mix of historic architecture and modern builds. It's the kind of place people move to and just never want to leave.
Right, so because of that extreme desirability
Yeah.
and the fact that people are holding on to properties longer.
The public inventory is mostly just an illusion of choice.
An illusion, I love that phrasing.
It teases buyers, but the truly significant properties are trading in total silence.
And right into that highly competitive, completely invisible market walks a very specific client. This isn't just someone looking for a standard four-bedroom house.
No, not at all.
This is a multi-generational family looking to relocate. And they are charting a very bold course. They aren't just buying a house. They are looking to establish a family legacy.
Which means their vision was incredibly specific.
Right.
And that makes the search exponentially harder in a low inventory market. They demanded 1+ acres of pure privacy.
Pure privacy.
Architecturally, they wanted either French influences or a refined, modern farmhouse style. They needed high ceilings, outdoor decks that looked out into deep woods.
But they also wanted to be close to Zionsville Village's downtown area.
Exactly, with total, uncompromising insulation from any neighbors or traffic.
Basically, they wanted to be right near the action, but completely invisible to it.
Yeah.
And looking at the public market was getting them absolutely nowhere. There's this direct quote from the clients during their confidential strategy section with Cara Conde that really stands out.
Oh, I know the one?
They said, "We've chased shadows on the market, but we sense something greater exists, properties that haven't announced themselves yet. We need someone who can find them all."
They literally sensed that the public market was holding out on them. What's fascinating here is the psychology of you, the listener, who loves to learn and gather information, compared to the psychology of the ultra-luxury buyer.
Okay, unpack that a bit.
Well, as a learner, you are used to having the world's information right at your fingertips. You want to learn about a topic, you run a search, you find the data.
You Google it.
Right. But in this elite real estate bracket, that democratization of information completely breaks down. The public market is built for the masses.
So it's generalized.
Exactly. Public listings often lack the depth or the bespoke customization a legacy buyer wants. The best of the best simply do not trade in public.
So if you rely solely on public channels, you're effectively only seeing the leftovers that the inner circle already passed on.
Yeah, you're looking at the scraps.
That brings us to the mechanics of how someone actually penetrates that inner circle. Like, how do you find a house that literally isn't for sale?
It's a process.
The case study breaks it down into this two-part formula, playing out on these invisible threads. The first part is the underlying human network. Cara has to orchestrate daily, intimate exchanges with Zionsville's inner circle.
We're talking about local builders, trusted past client.
And estate professionals, right? Like
Yeah.
wealth managers and attorneys who safeguard these legacies.
Because that ecosystem is built entirely on trust and discretion. Think about it practically.
Okay.
A homeowner with a massive multi-million-dollar estate doesn't want strangers wandering through their bedrooms on a Sunday afternoon open house.
No, of course not. They want a quiet, seamless transition.
Exactly. So long before they ever decide to officially list, they might casually mention their intentions to their wealth manager
Or their custom builder.
or a highly connected broker like Cara. If a professional isn't actively nurturing those specific human relationships every single day, they will never hear that whisper.
But here's where it gets really interesting. It is not just about shaking hands and taking wealth managers to lunch. Layered right on top of that human foundation is a serious tech element.
Oh, the predictive tech.
Yeah. Cara uses predictive models that scan for subtle shifts. She uses targeted outreach that uncovers a seller's intent before it is even officially voiced.
This is where real estate meets data science.
Right, but I want to push back on that a little bit because it sounds a bit like science fiction.
It does sound crazy at first.
How does an algorithm actually know someone wants to sell their house before they've even told their spouse? What kind of subtle shifts are we actually talking about here?
It's a great question, and it's not magic, it's just data aggregation. These predictive models look at public and semi-public data points to identify major life transitions.
Okay, give me an example.
For example, the algorithm might flag a property where the owners have lived there for 20 years. The public tax records show the owners are now in their late 60s, and demographic data suggests their children have recently aged out of college.
So they're empty nesters.
Right. Combine that with a sudden uptick in the owners searching for moving companies online or applying for a permit to fix a roof, and the algorithm flags that property as highly likely to transition.
So it's identifying the empty nester who is sitting in his 6-bedroom house and probably feeling totally overwhelmed by the maintenance well before they've actually picked up the phone to call a realtor.
Exactly. If we connect this to the bigger picture, this is a profound shift in how markets operate. Off-market access isn't about getting lucky and bumping into a potential seller at the grocery store anymore.
No, it's very intentional.
It is the ultimate marriage of human relationship building and sophisticated data analytics. It's a deliberate unveiling of hidden abundance.
The tech identifies the statistical probability of a transition. It gives you the target.
And then the human network provides the nuanced, high-trust introduction.
Together, they create a master key to doors that no one else even knows exist. And we get to see exactly what happens when you turn that key in this case study.
The results were pretty wild.
The discoveries from this specific search were substantial. They didn't just find one house that fit this impossible criteria.
No, they found a whole constellation of discrete opportunities.
Having a multiplicity of options is crucial in these high-stakes deals, isn't it?
It is. They uncovered 3 distinct, never publicized properties.
Walk us through them.
Sure. Property 1 was owned by a homeowner considering a legacy transition, but they demanded utter privacy during the viewing process.
Makes sense.
Property 2 was an estate being quietly prepped for the market behind the scenes, and it happened to perfectly, eerily align with the family's exact wish list.
Wow.
And property 3 was a sprawling retreat located right at the edge of preserved woodlands, which offered a lot of untapped potential.
Just imagine getting private previews of these places before anyone else knows they exist. It's like having the market entirely to yourself.
But ultimately, there could only be one winning crown jewel.
Right. The family went through an intense discernment process, weighing proximity to the village against architectural integrity. The standout estate they chose was incredible.
Oh, the details on it.
It featured imported stone accents glowing in natural light, incredibly warm rooms, and completely protective woodlands enveloping the entire estate.
Giving them the exact privacy they were desperate for. But the real takeaway here for you, the listener, isn't the specific finishes of the house.
What is it then?
The takeaway is why having multiple choices mattered so much. The psychological impact.
Which brings up an interesting point. If you find the perfect house, why does it matter that you looked at 2 others?
Because of buyer's remorse and the psychology of choice. When a family is making a massive generational investment, there is a very real threat of anxiety if they feel forced into a corner by a lack of public inventory.
Because they feel like they have to settle.
Exactly. If they only see one house on the MLS that kind of works, they might buy it out of desperation. By surfacing multiple off-market choices, Cara Conde removed the desperation from the equation.
That's powerful.
The family is actually quoted saying, "Knowing others existed gave us confidence this was truly destined."
They chose the estate not because it was the only option, but because it was the absolute best option out of a highly curated private list.
And those runner-up estates don't suddenly go on the MLS either.
Where do they go?
They go right into Cara's confidential vault, basically kept on standby for the next discerning buyer who happens to match that exact property profile.
But finding the property is only half the battle. The case study goes deep into how this deal was actually closed, and they refer to it as high art negotiation.
It really was.
Cara sculpted terms that maximized the advantage for her clients. It wasn't just a standard contract. She specifically priced the estate below what they call replacement thresholds.
Now, that is a highly technical, commercial-grade concept being applied to a residential transaction.
Okay, let's break that down for the listener. What exactly is a replacement threshold, and why is it such a big deal to buy below it?
Simply put, replacement cost is what it would cost you to buy an empty plot of land today, hire the architects, buy the materials, and build that exact same house from scratch at today's labor and material prices.
Which are already going up.
Exactly. In a surging market, existing luxury homes often sell for a premium well above their replacement cost because buyers are paying for the convenience of moving in tomorrow.
Rather than waiting 2 years to build.
Right. So negotiating a purchase price that is actually lower than the cost to build it new, especially off-market, is a monumental financial win.
And she also tailored contingencies for flawless execution and secured privacy layers that the source described as being as secure as ancient oaths.
I love that phrasing, ancient oaths.
It's very dramatic, but it gets the point across. And we need to look at the market context to understand just how big of a win that pricing was in early 2026.
The 2026 boom.
Right. The data in the source shows Zionsville facing persistently low supply, with forecasts pointing to a massive 9 to 11% appreciation in premium pockets of the market.
So buying below replacement cost in a market forecasted to jump 10%.
Means this transaction didn't just secure a home, it delivered instant, massive equity to the family.
And that level of sophisticated negotiation just doesn't happen by accident.
No, it doesn't.
If you look at the broader professional portfolio provided for Cara Conde, you start to understand exactly where this analytical edge comes from.
I was marveling at the sheer breadth of her expertise when I was reading through the source's extensive article index. She isn't just a luxury residential agent.
Not at all. She is deeply entrenched in the complexities of commercial real estate.
The breadth is wild. Looking through her portfolio, she is handling commercial property 1031 exchanges. She's analyzing self-storage, which she calls the hottest commercial real estate play of 2025.
Huge market.
She's covering the massive warehouse and industrial markets in Plainfield. She's looking at early education real estate.
Noting it as a recession-resistant asset class in Indiana.
Yes, alongside senior living apartments. She's guiding investors through 506B syndications.
Which is a very specific SEC regulation allowing sponsors to raise capital from private investors for large real estate projects.
And she even wrote about Cadillac's Formula One headquarters in Fishers and Caitlin Clark's impact on Indy. She's a certified negotiation expert and a luxury home marketing specialist.
It's a massive portfolio.
Okay, but I have to stop you there. We're talking about 10 of 31 exchanges, syndications, and Plainfield warehouses.
Yeah.
How does an agent knowing about a concrete warehouse in an industrial park actually help a family buy a luxury house in the woods? It feels totally disconnected.
I completely understand why it seems disconnected, but working with someone who understands complex commercial mechanisms brings a ruthless, analytical edge to buying a residential family legacy.
Okay, walk me through that.
Let's take the 1031 exchange, for example. In commercial real estate, a 1031 exchange allows an investor to sell a property and reinvest the proceeds into a new property while legally deferring all capital gains taxes.
So it's a tax loophole.
Essentially, yes. But it requires incredibly precise timing, strict adherence to tax codes, and a deep understanding of asset valuation.
Highly analytical, high-stakes tax maneuvering.
Exactly. And a commercial broker spends their day calculating complex financial metrics. They look at cap rates.
Capitalization rates.
Right, which is essentially the annual rate of return an investment property will generate based on its price. They analyze debt service coverage ratios, or DSCR.
Which measures whether a property's cash flow can actually cover its debt obligations, right?
Got it. They obsess over net operating income, the total revenue minus operating expenses.
So while a standard residential agent might walk into a luxury home and focus on the beautiful crown molding or the imported stone,
A broker with a commercial background is walking in and silently calculating the underlying financial velocity of the asset. They are stripping away the emotion. They are evaluating the property's long-term appreciation potential, its structural integrity as an asset, and its true market value against those replacement thresholds we talked about earlier.
that commercial mindset is what transforms a standard home buyer into a legacy builder.
Precisely. It brings a ruthless, analytical edge to an emotional purchase.
That makes so much sense. And she's not just looking at the math, she's tracking macroeconomic and cultural trends too.
Like the sports and corporate shifts.
Right. The portfolio shows her writing about how Cadillac's new Formula One headquarters in Fishers is changing the regional economy. She did an analysis on Caitlin Clark's massive impact on Indianapolis' sports culture
Which is fascinating.
and how that influx of attention and tourism translates directly into apartment real estate demand.
When you track the macro trends, like a massive corporate headquarters moving in, or a cultural phenomenon driving population density, you can predict which neighborhoods are going to appreciate before the general public catches on.
It all feeds back into that predictive off-market advantage.
It's all connected.
So what does this all mean for us? We've journeyed through this case study of hidden estates, predictive algorithms, and commercial-grade financial tactics applied to family homes.
It's a lot to take in.
It is. I want to ask you, the listener, a direct question. Think about your own life, your career, or your investments. How often do you just accept the publicly available options?
That is the million-dollar question.
How often do you just browse the standard job boards, look at the public stock listings, or swipe through a public real estate app, not realizing there's an entire off-market tier of opportunities waiting for those who look deeper and use the right network?
This raises an important question, one that expands far beyond luxury real estate in Indiana.
What's that?
We talked earlier about those predictive models scanning for subtle shifts, an algorithm identifying an empty nester who might want to downsize before they even voice the thought.
Uncovering intent before it's voiced.
Yeah. If algorithms and elite networks are now successfully predicting who wants to sell a house, or who might be open to being poached for a new executive job, or which private business is ripe for acquisition before anyone even makes a conscious decision to list themselves publicly.
Are we approaching a future where the public market in almost every industry is literally nothing but the leftovers?
Exactly. Is the public market just the scraps?
Wow. If the software already knows you want to make a move before you do, the off-market deal happens before the public ever had a prayer of competing.
It's already done.
It really makes you wonder how you can position yourself within the invisible threads of your own industry. How do you become the person who gets the call before the listing goes live?
You have to build the network.
You do. We're going to leave you with that lingering thought to mull over today. Thank you for joining us on this deep dive into the hidden, highly strategic world of elite real estate.